Hello and welcome to Morning Markets. I'm Roger Peterson. Thank you very much for joining us. Here are some of the stories we're tracking for you in the BNN Bloomberg newsroom. The International Energy Agency has agreed to release 400 million barrels of reserves. The move is the largest ever release of emergency oil stockpiles as governments seek to contain a spike in energy prices driven by the war in the Middle East. The agency says current oil market challenges are unprecedented. U.S. inflation slowed in February, suggesting price pressures ease before the war with Iran. Prices rose 0.3% from January, while inflation in the U.S. has been on a downward trend in recent months. The conflict in the Middle East has renewed concerns by boosting oil, gasoline, and fertilizer costs. This is amplifying affordability concerns among Americans before the midterm elections in November. Shares of Ballard Power are seeing a surge. The fuel cell maker has reached an agreement to provide 500 fuel cell engines to New Flyer, a subsidiary of NFI. The deal is the largest order in Ballard's partnership, and the engines could generate up to $50 million in revenue. Delivery is expected to start later this year. Stock up more than 13%. And taking a look at the markets right now, the TSX starting to claw its way back up, pretty much a wash right now. More uncertainty, of course, with oil and what is unfolding in the Middle East. U.S. markets, let's take a look there quick. And same thing, mixed bag. You've got the NASDAQ in the green by 0.37, Dow off by 0.35, and the S&P 500 up slightly by 0.1. Yeah, the volatility in the oil market continues today amid vessel attacks in the Strait of Hormuz. Our next guest says the Canadian market is relatively well positioned to weather the storm because of exposure to energy and gold. Let's get more now from Kai Lam, Chief Investment Officer at JCIC Asset Management. And Kai, thanks very much for joining us.
Thank you for having me.
What gives you the reason for optimism right now for the Canadian market?
I mean, look, with the war in Iran, we have elevated oil prices, given the risk to supply, and it is an uncertain situation where we don't know when that'll end. And so that's resulted in the high oil prices and a higher U.S. dollar against other major currencies. We also think that the gold price will have an elevated geopolitical risk premium that will persist and was there even before the war started. And in that context, the Canadian market, when we look at the energy market and the gold, it makes up basically about a third of the market. And so we think those will be resilient in this volatility.
And your thoughts on the impact of the release by the IAE of 400 million barrels of oil. Will that have an effect, do you think, on prices?
I mean, I think that'll have an effect on prices from where we saw it potentially, because just a couple days ago, it hit $118 a barrel, and so we can see that there can be involvement to kind of keep things down. But regardless, it'll still remain high for now, and that'll still have an impact on inflation.
And with Canada, we don't actually have an official Federal Reserve. We rely on private reserves, essentially, the oil companies. Does that have an impact here at all on anything that is unfolding?
I mean, obviously, it's a global price, and it'll have an impact on potential inflation in Canada. But we are a major energy producer, and so we've seen, other markets show greater sensitivity, like Europe and Asia, where they're bigger net importers of it, and so then that's something to watch out for. So we're relatively a bit more better positioned than those markets.
And I know, like Japan, a huge concern there. I think they import almost all of their oil. What kind of an effect could we see on Japan, places like Europe?
Yeah, I mean, the outlook for international markets including Europe and Japan was stronger actually before the war, and you're seeing that sensitivity in those markets since it started. And so that's something we have to watch for. We just don't know how long it'll last for, but we still see those market volatility there as an opportunity because we're more of a buyer of dips. given that, historically geopolitical risk doesn't really impair long-term market performance. It'll eventually fade, and so we'll just take advantage of those opportunities.
And we were seeing some rotation before all this. Is it still happening, and people still rotating out of tech?
Yeah, one of the challenges with the rotations that's been happening under the surface is we've seen significant rotations very quickly, and so it's been hard to, kind of navigate or pin down which sectors to really favor or not favor with any real longevity. So for us, we've been more tactical on an individual stock basis, and just looking for opportunities on that way instead of specific sectors.
All right, and let's talk about some of the banks you're liking, or some of the stocks you're liking. First Service is one of them. What's your draw there?
Yeah, so then this is actually a really recent purchase. If you can see, it has been weak performing. And that's because in 2025, they had some challenges with a couple of businesses with the roofing and the renovation or the restoration business. But ultimately, most of the revenues are pretty visible and recurring within the property management and property services businesses. And we think 2026 will see an inflection point where those two areas that were negative growth are going to turn positive. The rest of the business, is still going to grow mid-single digits with acquisitions. And so you're getting this company at a trough valuation. Valuations on the lower end of their historical range and well below historical averages. So we want to take advantage of this weakness.
And any potential headwinds for it?
Look, we'll have to see how the economy goes in the U.S. We believe that the GDP growth was going to improve this year with the lower interest rates and the One Big Beautiful Bill benefits. We'll see how long this Iran conflict will last and that impact on energy pricing. So we're still monitoring that.
All right, moving on, Hudbay Minerals, you just bought some of that recently. What makes it shine?
Yeah, again, we also bought this recently on the pullback, taking advantage of that. We do like the copper commodity, given the long-term potential for benefiting from electric vehicle expansion, as well as power generation expansion. And Hudbay itself is a low-cost producer of copper with gold byproducts, and they have strong growth over the next several years. It does trade at a discount to other large cap peers and trades below its net asset value. So we like that as well.
Now, and they just bought Arizona Sonoran. Any more opportunities do you see for them right now?
Yeah, so there will be other opportunities for them to take a look at, but really they don't need to at this point. They have enough projects on the go to deliver really strong growth to go 2030.
Okay, and last one to get to in the international markets, Schneider Electric.
Yeah, so we like Schneider Electric. We think that the mega trend towards energy efficiency is going to continue, and over 80% of their business is within energy management. We also like their exposure to data centers, in which in 2025, about 21% of the revenues came from data center revenue, but that should grow to almost 30% for 2026. And they're going to be a prime beneficiary of this data center growth.
And they really are kind of the epitome of picks and shovels, aren't they?
Yeah. Yes. And within the hyperscalers, I think the hyperscalers are the biggest customers for them in the data centers, in which they provide they have 95% exposure to those hyperscaler data centers.
Any concern with a bit of the movement out of tech that some of the projects may get stalled or delayed?
Look, I think the growth is really, really, really strong. And within the data centers, they're going to have to continue to build them out. I think that when it comes to AI development, I know there's been concerns about overspending, but really, ChatGPT was only introduced a few years ago. You do have to have leadership established, and so then you have to spend right now, and it's not really a choice. And so they continue to benefit from it. But we do like having the companies that directly, benefit from selling equipment into the cycle.
Okay, we'll wrap it up there. But Kai, thanks very much for joining us.
Great, thank you very much.
Kai Lam is Chief Investment Officer at JCIC Asset Management. Up next, the IEA has agreed to its largest ever release of oil reserves in an effort to calm surging energy prices. We'll get more on that after this. The International Energy Agency will carry out its largest ever oil stock release in a bid to contain a spike in energy prices driven by the Middle East conflict. Let's get more on oil from Terry Wiseman, Global FX and Rate Strategist at the Macquarie Group. Terry, thanks very much for joining us.
My pleasure, Roger.
400 million barrels sounds like a lot. Will this make a difference?
It can make a difference at the margin. 400 million barrels per day is about 4 times global daily oil production. It's about 16 times, so about 20 times what flows out of the Persian Gulf on a daily basis. 16 days is not trivial. If you believe that the war may only last for a few weeks, then certainly you've got a lot of coverage with 16 days. But I want to stress here that what's also important is that this is only one measure that governments can take to lower oil prices. There are other measures to blunt the impact on the consumer. One of them is just to reduce excise taxes in the U.S., either at the federal level or the state and local level. We could also see a relief of sanctions on Russia that could also release some of their stranded oil, which is in tankers. So there's a few things. I would just treat this as one of a complex of things that governments can do to blunt the impact. It is not trivial, but it's not huge either.
Have you heard of any countries doing that, easing up on taxes or anything to that effect?
Oh, there has certainly been chatter in the U.S. You can see that there are policy analysts that are talking about that as a potential solution. But keep in mind, if you look at the average gallon of gasoline in the U.S., about 50 to 60 cents of about maybe a $4 price, let's say, is taxes. That, again, that is not trivial. It doesn't mean that all of it will be taken off, but if half is taken off, at least temporarily, that could blunt the impact to some extent, politically and economically for households. Not all of those taxes are federal taxes. A lot of them are state and local taxes, so a lot of these decisions would have to be made at the state and local level. And maybe that's why there isn't a coherent or concerted effort to move along with this. But I can certainly see if oil prices and gasoline prices stay high for a while, for a long time, say beyond a few weeks, some states would consider doing this.
And then, of course, they'd have to make it up. Now, I guess the other question, just going back to the 400 million barrels, would they do another release if this looks like it might drag on, or would they be hesitant? I think they did it in 2022. They did 2 releases, right?
Yeah, I see this as a political decision, right? These are policymakers, and policymakers are always concerned about the vote, and especially in the U.S. here, where there's a midterm election coming up. So I would think that in view of the political considerations of keeping gasoline prices high and suppressing any increases in oil prices, they might do a second round. Keep in mind, this is also useful from the perspective of manipulating market psychology. If you are worried that they can release again, you're unlikely to bid the price of oil too high because you might get slammed by an increase in supply. So just keeping the word out that this could happen again may be just as effective as actually doing it.
And I want to ask, in your notes, you talk about crude oil behaving like a meme stock during this conflict.
Yeah, well, I mean, that's just a reference to the volatility. Of course, the volatility is associated with the high level. And I think that what we should continue to expect over the next few weeks, in part because I do not believe that this war is going to be over very soon. Depends, of course, on what you mean by very soon, but I think we're talking about 3 more weeks, not 3 more days. Then the price of oil will stay high. It will be headline sensitive for sure. And I think the most important consideration here is the market's view of how long this war will last. If the war is deemed to last a long time, you'll see prices stay high just on the premise that buyers will hoard oil. It doesn't have to be an outright supply disruption that causes the oil prices to stay high, although currently, of course, it is a disruption in transportation that is causing oil prices to stay high.
And is this making other oil sources more appealing? Talking about Venezuela, Canada, South America.
Well, I mean, oil is oil, right? I mean, the varieties are distinct only insofar as some are more expensive to refine than others. But I will tell you that I do think that to some extent there was planning for this war, ahead of this war. The actions that the U.S. took in Venezuela to secure Venezuelan oil and make it flow more readily was probably taken in as a precaution or in anticipation, let's say, of the prospect that there could be a U.S.-Iran war. So yes, of course, the U.S. government is probably looking for other sources. In fact, it has secured another source ahead of this war.
And that's and down south, Brazil, Colombia, and you mentioned South Africa as well.
Well, South Africa generally does well when commodity prices do well. And what's interesting is that the increase in the price of oil has driven other commodities higher as well. So to the extent that South Africa is a commodity producer, generally it's certainly helping the terms of trade. South Africa is obviously very far from the conflict as well. But you're right, absolutely right. I would single out Latin America here in part because Latin America is one of those regions where there has been ever higher production of oil over the last few years. And there have been more discoveries. Take Argentina, take Guyana, take Brazil, for example, in its pre-salt formations, where the increase in production has been about 20% since 2022. So, of course, every dollar higher in the price of crude oil helps the countries that produce more and can get it out much more than it used to if they're producing more today. And that's the case with Latin America.
Okay, we'll have to wrap it up there. But Terry, thanks as always for joining us.
My pleasure, Roger.
Terry Wiseman is Global FX and Rate Strategist at the Macquarie Group. Coming up, today's market drivers with Bloomberg's Monique Molina. Time to take a look at today's market movers. We're joined by Bloomberg Equities reporter Monique Molina. Monique, thanks as always for joining us. First up, SLB. Tell us a little bit about the company and how's it doing?
Yes, so SLB, their shares are down this morning after the company announced that due to the war in Iran, their first quarter earnings are going to be 6 to 9 cents lower than previously anticipated. They've had to suspend some of their operations in the Middle East because of the ongoing conflict, and they're saying this is going to impact both their earnings and the revenue for the quarter. Analysts are seeing this as negative for the company and for the industry as a whole. They are the first S&P 500 energy company to pre-announce that the war is going to impact their earnings. So some are fearful that we're going to now see peers also make similar announcements or see similar impacts to their results. Even with this only being a couple weeks into the conflict, it's still having so much of an impact that if it were to continue further, analysts also say then there could be even larger impacts. And this is already about a 12% cut to the earnings for next quarter. So this is something that's really going to be in focus for some of these other energy names, and this is weighing on some of their peers as well.
And it's just clawed back into the green a little bit right now. Not much, though. Franco-Nevada, mining giant. What's going on there?
So Franco-Nevada, they reported earnings last night, and they beat on their earnings as their equivalent units of gold sold beat for the quarter. And this is something the analysts are seeing as really positive. They also provided their guidance for 2026 and through 2030, and the guidance was roughly in line for 2026, but the 2030 guidance came ahead of expectations. There's going to be more developments and more production coming online than previously anticipated by analysts. So they see this as really positive, that long-term there's a strong outlook for the company, and they think there's even more opportunity for upside because the guidance doesn't include Cobre Panama mine. And if this mine comes back online before that time, there could be even additional earnings to the beat that we've already seen in terms of the guidance.
Okay, and last one, Solar Edge Technologies has the Help Wanted shingle out.
Yes, so Solar Edge Technology, their shares are up right now. reversing some of the losses that they saw earlier after they announced that their chief financial officer would be departing the company as of June to join another public company. Well, this does come as a bit of a surprise in terms of the timing of the departure. Analysts note that the company has said that this is going to be a year of transitions, that they're kind of going through some changes right now, and that the CEO remains confident in the direction of the company. The SolarEdge's investor relations director has already announced their departure. So there's a number of shifts happening right now, but they're still optimistic on the outlook for the firm, and that's why we're seeing some of this positive reaction.
Okay, Monique, thank you very much for that one. Bloomberg's Monique Malima. Well, the Iran war is now causing increased costs for Canadian farmers who depend on fertilizer for their crops. For more on this, we were joined earlier by CTV's Scott Hurst to discuss the latest impacts to Canada.
There is a lot of concern about the impact this is having on the Strait of Hormuz. You've likely heard a lot about that over the past week and a half as this war has begun, as global energy concerns are mounting. Oil prices are back up, and the increased cost for farmers now means more costs for consumers down the line. Fertilizer, much of the product that is needed to make it, goes through the Strait of Hormuz, and now we are reporting about 3 more ships reportedly attacked today near the Strait of Hormuz, the latest of more than a dozen reported attacks on commercial ships since this war began some 12 days ago. About 20%, as you know, of the world's oil and liquefied natural gas travels through the Strait of Hormuz. Thousands of ships typically pass through the channel every month, and so that is why this choke point is such a concern for the global economy, for oil prices, and for energy costs. And when you see energy costs soar, that's when there is a concern that it's not just gasoline, as we've been talking about now for a couple of days, and the increased price at the pumps for consumers, now the increased costs for farmers when it comes to fertilizers, and ultimately when energy costs are up, so much concern, Andrew, about what it can mean for the price of so many other goods we rely on in our day-to-day lives.
And can you update us on Canada's latest reaction to the Iran war? Any more commentary from the federal government?
The Prime Minister clarified Canada's response on the war after facing criticism for not having a clear response and not really having a clear path forward for Canadians. So he clarified that yesterday by saying Canada will never participate in the U.S.-Israeli offensive. And he was also criticized for not attending a debate on Monday to help clarify Canada's response, as we're also getting more information from Global Affairs Canada on what it's doing to help Canadians in the region, the more than 110,000 Canadians who've registered with the government. And the update we got from Global Affairs is that from last Wednesday to Sunday, March 4th to 8th, more than 4,300 Canadians, permanent residents, and their family members have arrived back in Canada through direct and indirect routes from the Middle East. And since last Wednesday, March 4th, the government has helped facilitate the departure of 871 Canadians to a safe third country, with more planned departures by land from Bahrain and flights from Beirut in the coming days. Of course, it is such a volatile situation with the strikes and counterstrikes by Iran that the way Canadians and other citizens are able to get out of the region could, of course, change at a moment's notice because of available airspace and the threat of more strikes and counterstrikes, Andrew.
Andrew speaking with CTV's Scott Hurst. Cenovus gets an upgrade and Canadian Natural Resources a downgrade. We'll speak to the analyst and find out why right after the break. The International Energy Agency has agreed to release 400 million barrels of reserves. The move is the largest ever release of emergency oil stockpiles as governments seek to contain a spike in energy prices driven by the war in the Middle East. The agency says the decision was unanimous, adding that current oil market challenges are unprecedented. Shares of CES Energy are getting a boost after reporting higher profit and revenue in its latest quarter. Beating estimates, revenue growth also increased in Canada and the U.S. CES has also boosted its dividend and says looking ahead, it expects resilient supply demand as well as steady drilling and production activity. Shares of Campbell's are falling after the packaged food company cut its profit outlook for the full year, missing estimates. It's off by more than 8% right now. Campbell says results fell short of expectations due to weaker than expected performance in its snacks division. The company says storm-related shipment disruptions in January and related supply chain costs also impacted sales. All right, taking a look at the markets south of the border. They are now back down in the red. It was a split a half hour ago, but right now solidly in the red. The S&P 500 off by 0.4, Dow by 0.94, and the Nasdaq off by 0.23. And a quick look at the TSX. It has now taken a turn as well, off by nearly 0.6% after hovering right into neutral about a half hour ago. Well, Veritas is upgrading mega energy owner Cenovus to a buy. That stock is trending higher this morning, but slightly reduced the target price for Canadian natural resources. This comes as volatility in oil prices continues to surge because of the conflict in the Middle East. Let's find out more on this with Daryl McCubry, VP of Energy and Infrastructure at Veritas. Daryl, thanks very much for joining us.
Happy to be here. Thanks for having me on.
All right, let's talk first with Cenovus. What are you liking?
So leading up into the conflict, we were in the camp of the supply glut, the idea that there could be 3 million barrels per day of excess capacity, superimposed with maybe 5 million barrels per day of OPEC spare capacity that could come on in relative short order, within an order of months. Since the conflict, that's obviously changed. Our view of risk around development in the Middle East is a lot higher now. Futures have obviously responded also, and I think had we maintained a lower oil price estimate, which is the key driver really to Cenovus going higher, we hiked our oil price estimate by $10 from 60 to 70. We wouldn't have many positive investment theses in the whole space. But in a scenario where we're in a price spike, both CNQ and CVE benefit disproportionately compared to the other oil sands majors. They're more sensitive to the WTI price spike. And so we increased both of those valuations by near 30%. The difference is CNQ stock has performed relatively well compared to CVE in the past month or so, kind of as the signs were becoming more clear that this might escalate and be longer than people had first hoped for. And so CVE is a name that stands out as relatively levered to the higher price environment we're in. For investors who see this kind of lingering on for months, not just weeks, I expect it to be the name that kind of performs best amongst the best four. And the one name we haven't mentioned, if things were to go the other way, Suncor is probably the best defensive alternative per our analysis now.
Okay, and what makes them more susceptible to the price spikes?
It's the upstream exposure. So with Cenovus and CNQ, you don't have that integration or downstream operations that can dent the price spikes that happen with WTI. It's something we saw actually occur during the 12-day war last year, where just like now, WTI prices spiked, and so too did crack spreads, blended crack spreads across North America. After peace or a ceasefire was announced, I think it was on June 24th, prices came down pretty quickly for WTI, but those downstream operators were able to dent that spike on the downside and keep higher crack spread margins for longer. And so that's where we see in a kind of bearish outlook, if you're skeptical that this conflict will continue and transit through the Strait might open up in relative short order, then a name like Suncor is probably one that does better, holds up better in an overall environment where equity values probably come down just because prices have come down for WTI. I hope that kind of gives the gist.
Yeah, no, and with the spread, any indicators how long that might go? They might be able to hold that and continue to work it.
So I'm going off recent precedent that they were able to hold it for months following the 12-day war last June. But I think the key thing to kind of keep in mind is that they have that potential to smooth those edges. So it's not as abrupt to profit as what you see with Cenovus and CNQ. And that's why even last year, right, when we headed into the year, oil prices were probably nearer to 80, but ended up coming down closer to 60 over the course of the year. It was the integrated names that held up relatively well. And it's because of their better defensive attributes if oil prices trend lower.
All right, I want to get your thoughts on the the IEA releasing the 400 million barrels. Canada, I mean, we don't really have a reserve, an emergency reserve per se. How does this all play out to you?
Short term, it buys us months. I think it buys months where you wouldn't have as severe a disruption of energy markets. And so I think the goal here is obviously to keep a lid on prices. So there isn't a real urgency to end the conflict sooner, and because potentially that's not where things have kind of landed yet, where either of the parties are ready for it. And so, yeah, I would say on the whole, the best way that we're thinking about this is likely weeks, potentially longer than weeks. And so the ability to mitigate that is dependent on how active the strait is. If we presume that the strait cuts, say, 50%, I mean, it's down a lot more today, but let's say 50% of the transit is down just for simplicity. You probably have about 3 to 4 months before things get really sticky. And you've now depleted your reserves down much closer to kind of a 50%. I always think of that as a floor. You don't want to go much below that, just strategically. So I do see that as kind of why the market's reacting initially the way it is. They see this as short-lived, and the Iranian threat is persisting. So there's concern that also the threat to the strait will persist.
And for Canada, our energy minister has said it's considering boosting our oil output. Can we, and where would it go? I just saw the numbers from the Vancouver port that their oil exporting has just jumped over the last 2 years.
So yeah, I think we can. It's just it's a question of timing. We do have a bit of spare capacity, I think, on the TMX line. Shorter term, though, I don't think there's much we can do with the infrastructure we have. Like, the issue that Canada faces in its energy complex is that it's captive. Getting these supplies out to these markets is challenged, but projects like the new Prairie Connector, the revived Keystone XL, the mainline optimization phases, 2 announced already, probably more could come. You're already to maybe 1 million barrels per day before we even talk about West Coast expansions. So there's going to be room. It just takes time to have it developed.
Okay, we have to wrap it up there, but Darryl, thanks very much for joining us.
Thank you for having me.
Darryl McCubbrey is VP of Energy and Infrastructure at Veritas. Coming up, shares of Uber are accelerating after the company announced a deal with Amazon to use robo-taxis for some rides. We'll hear from the company's CEO right after the break. Uber announcing today that it will let customers hail robo-taxis starting in Las Vegas this summer. The ride-sharing giant has signed a multi-year agreement with Zoox, which is Amazon's autonomous driving unit. The CEOs of both companies spoke with our partners at Bloomberg Television.
We're really looking forward to bringing our experience and sort of this way to ride to the Uber platform, in addition to also being available.
The way to ride is interesting. You know, Uber is not a ride. It is a platform, a marketplace for increasingly different kinds of rides. What is it, Dara, that you think you can help Zoox do that I guess they wouldn't otherwise be able to do on their own?
Well, we bring enormous distribution on a global basis. And I think that there's this narrative of it's either or, either you go direct to your customer or you go through a platform. And the fact is, if you look, for example, on Uber Eats, you have some of the best brands in the world, whether it's a McDonald's or a Starbucks or Chipotle, having a direct interaction with customers through their own apps, but also using the platform to expand their distribution. And I see the same thing with Zoox as well. Zoox is on his way to create one of the best brands in the business in transportation.
Which you've experienced recently, right?
Absolutely.
You went and took a ride.
It's a great experience. It's a purpose-built vehicle. And to have that experience on Uber, we think will only magnify what Zoox is bringing to the marketplace.
This is small scale in the first instance, right? In Las Vegas, and then where you're already active, and then LA. The mechanics of it are interesting, right? Because as a rider, you are not guaranteed in the first instance that you can choose a Zoox. It's algorithmic. It depends on the circumstances for you to have, I think the language you use is the opportunity to be matched with the Zoox. I guess supply in the first instance is why you've pursued that plan at first.
Yeah, but really no, because look, it's a platform. It's a global platform. It's available. You have all kinds of people who show up in Las Vegas. Some might know about Zoox, some might not. And the ones who don't probably know about Uber. So why not take advantage of that? That's really all it is.
This is early, but would you just explain, I guess, longer term what the business plan is? Is there a per-ride revenue share agreement? How do you split the fare when you're able to charge a fare, Dara?
I think for us now, the focus is going to be the customer experience. We want to make sure that whether, obviously, the Zoox direct experience is going to be best of breed, but also having the experience through Uber is going to introduce you to the differentiated experience on Zoox as well. That's really going to be what Aisha and I are focused on. You know, I would say the economics take care of themselves over the long term.
Data is going to be critically important here. So let's start, I guess, Dara, with what data sets can Uber provide Zoox that help them with scale and data sharing that you've got in place?
Well, we are certainly going to work with Zoox in terms of traffic patterns, and now Zoox is going to have access to that data directly as well. But I think the combination of the traffic patterns that we see and the customers that we see, whether local or international, along with Zoox's proprietary data, I think is going to help Zoox be even more efficient as an entity going forward.
Yeah, and I'll add to that also the experience of dealing with things, or just starting to deal with large events, things that Uber knows how to do in their sleep, and will essentially speed up our knowledge of doing that.
And also speed up deployment.
Of course.
You've always been very careful and cautious, I think is the wording that you've used. But is there now a sort of a different approach that working with Uber gives you to get the Zoox purpose-built vehicle? We can bring it up on the screen again. You know, it's a unique form factor in this country, and of course there was the big NHTSA news yesterday. But same question, what's changed in your ability to do that?
So I think the last time you asked me the question, I said, look, first we want to be ready. Our approach will always be cautious and small and scale from there. What's changed is that we're deploying in Vegas. We know the market very well. We understand the patterns, and we think that partnering with Dara, Uber, and the team over at Uber will really help us not just bring the differentiated customer experience, but speed up how you deploy, how you operate on a daily basis. And we're looking forward to that.
Dara, Uber's shares are up 2%, but when the news hit, you know, in pre-market, there was a really positive reception to this. What do you make of that? You know, it's consistent with what you've already done. Capital-light model, partner with both automakers, the technology stack, and software names?
Well, we think autonomous represents the future of transportation, right? It's safer, ultimately, than human beings. We think it will make transportation available to more people. So this is just another step in our direction of an open platform for both human drivers and robot drivers who are safe, who are best of breed. And I think Zoox represents one of the top brands and top technologies and top experiences in the industry. And we're very proud to partner up with Zoox, and we're really looking forward to growing together.
Dara, what did you learn from your ride in Las Vegas as a market?
You know, I think that obviously the Zoox experience is, I think, going to play in any market, but Las Vegas especially, it's a social place to go. People go to Las Vegas in groups, etc. And one of what was clear to me with Zoox is a differentiated experience in terms of the setup. It is a purpose-built vehicle. It feels, when you're inside, it feels so big and so generous in terms of the space, but then actually the vehicle itself is quite efficient. So for me, It was very interesting. I think Zoox is unique in building out this kind of vertical stack, purpose-built vehicle, and for me, the quality of the ride was absolutely on display for me.
Aisha, you are a member of Amazon's leadership team, otherwise known as the S team. You're actually ranked #1 in alphabetical order. I checked. A lot of questions I get for you is the capital plan. You know, if you can get some more money from Amazon to accelerate your progress. Amazon's been active in the bond market. this week. What can you tell us about your access to capital?
Amazon has been great. We're super happy to have them as a parent. Capital is not something I worry about. I worry about executing, delivering. Now that we're entering this commercial phase, this promise of a safer, cleaner, more enjoyable future on the road with our purpose-built vehicle that really gives you this delightful experience is really what we're focused on. I don't worry about capital at all. I worry about delivering.
Uber, Dara, is becoming kind of like the neutral marketplace for all kinds of AV providers, not just in the US, but globally. Have to ask, therefore, have you held any talks with Tesla about convincing them to take their plan, which is a proprietary ride-hailing service, but also purpose-built vehicle, to the Uber app?
We talk with all the various AV providers. Tesla obviously isn't at the point now of getting to no vehicle operator, but they are testing and their technology is excellent. So we're happy to have discussions with them as well as other players. But today is about Zoox, and we're here to celebrate that.
Coming up, Prime Minister Mark Carney facing some tough questions yesterday regarding his position on the Iran war. We'll find out more after the break. Prime Minister Mark Carney had to face some tough questions yesterday after making a last-minute appearance in Question Period in Ottawa. CTV's senior political correspondent Michael Couture has more in this report.
His appearance at Question Period was a last-minute addition to his schedule, and after a week of shifting narratives around the war in the Middle East, the Prime Minister looked to clarify Canada's stance. Mark Carney said Canada opposes Iran's development of nuclear weapons and the regime's exporting of terrorism. The Prime Minister also said Canada will not participate in the American military offensive in the region. But the leader of the Bloc Québécois wants to know if Carney also asked allies if they're all on the same page.
As long as we act on our separate paths, we don't have the leverage to force United States into themselves a more coherent position because we don't know what the President of the United States wants.
Je viens d'avoir une conversation avec le président du G7, M. Macron.
Carney said he had conversations with leaders from France, Japan, and the U.S., but wouldn't give any more details. The Conservatives have criticized Carney's stance on Iran, saying it's been shifting over the past week. While Poilievre says he stood by the Prime Minister's original support for the strikes on Iran to take down the regime, he's unequivocal about the Supreme Leader's successor.
You're talking about the son?
The son, yeah.
No, this is a terrorist. We stand with the Iranian people for democracy. We stand against the Iranian theocratic dictatorship that has attacked our country.
Prime Minister Carney says he plans to speak with other G7 leaders this week, and he says they're all united in calling for a de-escalation in the Middle East. Michael Couture, CTV News, Ottawa.
And the war is continuing to create chaos around the world. It's not just soaring oil prices that are having an impact. Fertilizer is seeing its prices jump as well. CTV's Alex Karpa has more on what that means for Canadian farmers.
This is our nitrogen fertilizer.
Fertilizer is an essential part of Kevin Peters' farm in southwestern Manitoba.
This bin will hold about 100 tons of nitrogen fertilizer.
Both his crops and livestock rely on it heavily. But since Israel and the U.S.'s attacks on Iran, the average price of nitrogen fertilizer has skyrocketed around 30% in the last week.
There's always some disruptions seeming to happen somewhere in the world that's changing our daily prices.
Roughly a third of the world's fertilizer shipments move through the Strait of Hormuz off southern Iran. With the vital shipping route effectively closed, economists say global prices are rising.
Fertilizer very important to our growers here, and especially at the time of year right when we're gearing up for planting season.
Anderson says the world's fertilizer supply was already under pressure before this war started.
This adds another layer of increased cost to their bottom line.
This price increase is yet another blow for farmers who have seen their input costs increase dramatically over the last few years. Jill Verwey with Manitoba's Keystone Agriculture Producers is desperate for the war to end soon.
If this drags out further, then it's going to have bigger impacts on availabilities, capacity for farmers to get that fertilizer on this spring.
Watching a deteriorating crisis for Peters has made staying optimistic difficult.
We're just cautious about overextending ourselves, and we want to be here producing food and producing livestock, for the markets.
Experts warn the high cost of fertilizer and other goods are likely here to stay, even if the war in Iran were to end in a few weeks. Alex Scarpa, CTV News, in your Steinbach, Manitoba.
Know Your Options is back. Tune in today at 3 p.m. Eastern to have all of your options trading questions answered by Chris Tom of Moat Financial. Send us your questions to knowyouroptions@bnnbloomberg.ca. And Market Call is coming up next. Joining us today, Bruce Murray, CEO and CIO at Murray Wealth Group. His focus, North American and global equities. And as we end the show, let's take a quick look and see how the markets are doing right now. They've taken a turn. The volatility is back. They were in the green at some point this morning, and now you can see the TSX off by 0.66%, and pretty much all the groups right now, all the indices are off. You've got the worst, the hardest hit. Tech is the one taking the big one. Materials as well. Tech is off by more than 2%. Materials by 1.5%. And some of the worst, some of the big losers today, Discovery Silver and Go Easy, still getting hammered after losing nearly 60% yesterday. It's down another 16% for today. Let's head over to Wall Street, and it's not going to be much better there. You can see, again, same thing. Everybody in there red right now. The S&P 500 off by 0.33, Dow by nearly a point, and the NASDAQ by about 0.1%. Thanks for watching Morning Markets. I'm Roger Peterson. We'll see you back here tomorrow.